We've had quite a rally, haven't we? And we're not that far away to the end of the year. And the data is still pretty mixed. We've had some very strong data on the jobs front, and then services data out yesterday, which again was stronger. And yet we know the global economy is slowing down. So I think there's quite a lot priced in the very short term. And our outlook for 2023 is from volatile markets. And we're still going to be in this higher inflationary regime where we're going to see liquidity continue to tighten, which is quite challenging for all asset classes.
Make the point that inflation is high and out of control globally right now. Does that mean you're just not encouraged by any of the data at this point? You don't think any of the action we're seeing by central banks is making a difference?
No, I do think it is making a difference. The headline, as you've already reported, we've seen some numbers decline. And obviously the oil price has been weaker of late. But what I would say is that it's all about inflation expectations. And I do think that there's a behavioural element that's now built in terms of market conditions, whereby people are still getting quite significant salary price increases. And the labour market, particularly in the US, is pretty tight. So I still think there's going to be a follow through whereby inflation remains stickier, persistently higher for longer.
A very good morning to you, Suzanne. I'm just looking at the opportunities to be found according to your copy. You say there are rich pickings to be made specifically in energy, transition of energy and other commodities such as food and food-related industrial cyclicals. I must be honest, I find it very difficult to invest or to look at the investment case in a lot of energy transition stocks at the moment. I think it's a minefield, Suzanne. Where are the rich pickings?
Yeah, you have to be really, really stock selective. There's a number of wind, solar, infrastructure-related companies that are either listed in the UK, Europe, or even out in places like China. Some of them have been significantly impacted in September, for example, by the LDI and UK gilt debacle, where a number of more illiquid securities got sold off, and some of these haven't totally recovered. And then in China, obviously, that's been impacted by COVID, and yet some of the best technologies do sit at and reside in China. And if you can be very stock selective, there are very much opportunities there. And on the sort of carbon emission front, you've got some big integrated oil companies that are still sitting on low single-digit P multiples with very high dividends, very decent cash flow yields. And we do think that energy is still very much constrained in terms of supply versus demand. So there is a lot of opportunity cross asset class. We invest multi-asset class, so it's not just equities that we think about, but it could be corporate debt. It could be the commodities themselves through various vehicles. And copper is another one where, over the longer term, particularly in the electric vehicle space and the 5G space, and as China opens up, that's again another metal that we think will do pretty well in a more inflationary backdrop as well.